And that means we're now live here on our YouTube channel. It's our daily show we call the Halftime Report. We go through the stock market, commodity markets, currency markets, one step at a time, top-down analysis style, looking at all the news that matters and breaking it all down for you guys out there as our community. Welcome back, hashtag Team Tackle, right in the chat as you're coming on in for the conversation. If you're brand new to the channel and you've never been in here before, make sure that you click subscribe, click the bell so that whenever we go live with these programs, you can be alerted. Come and join us for daily market analysis. Let's bring the coaches in here. Matt first. How you doing today on a Tuesday?
Doing fantastic. Excited to be here with the crew to break down the limited market action here on a Doji Tuesday. You gotta like Doji Tuesdays though. At resistance, little hesitation, never hurt anybody.
Dude, Doji Tuesday at Resistance is fantastic. I love them, actually. Light news day in the market, sure, you bet. But cash flow is intact, trends are intact. There's always opportunities. Kind of run your routine and move on with your day. Marky, how you doing today, sir?
Yeah, my daughter was sick last night, but she's feeling a lot better, finally eating. So, I mean, when your kids are sick, that's all that consumes you, right? And so she's doing better, so I am doing better, even if I'm working on a little less sleep than I normally do.
Yeah. And Coach Emily, how are you doing today?
I am doing wonderful today. Like Matt said, it is a Doji Tuesday, so I think I can go and start making preparation for dinner tonight and not have to be too concerned about what the market is doing today.
Dude, there's nothing wrong with it, right? I mean, you go through your routine, you do your job as a trader, and that's it. You know, we like days like today. So let's get down to it here in just one moment, Matt. Before we get into the analysis, though, I do want to promote the podcast that was released just yesterday at Trading Justice. Each and every Monday, we do hold our podcast. Yesterday, we did one on the volatility build as well as the straddle in terms of implied volatility cycles, how those things work, and how to execute trading strategies using the straddle or the strangle strategy. Matty, talk a little bit about the podcast, because this is a topic that you're passionate about. I know you love volatility conversations. Just a little discussion about the podcast, if you can.
I do. We had a great conversation on volatility and why volatility is important, but specifically pertaining to the volatility cycle that happens between two earnings reports and how we can try to take advantage of that. And so, you know, Tim had a really fun and hopefully educational conversation on implied volatility and how to take advantage of that. And you know, we talked a little bit about a couple stocks that are kind of in that zone for volatility builds. Got earnings, 4 or 5 weeks here on Nike. Volatility's at the low price. Expect that volatility to creep up over the next 4 or 5 weeks into that 40, 44 range. As that volatility builds, and let me kind of show you, as you see volatility down here in front of that projected earnings report there, the expectation is volatility will build back up into the historical levels right here between 40 and 44. As volatility builds, what that will do is offset the theta decay that you will guarantee to have when you do a strategy like the straddle or the strangle. And so if you get the volatility build, that will help offset some of the time decay, give you a little opportunity on a bi-directional play on Nike. We talked about that a little bit. You know, Netflix, same type of conversation, volatility at the low point. Obviously expect volatility to build in front of the earnings. And honestly, the conversation was, if you expect volatility to build in front of a known event, whether that's an earnings or some other type of an event, how do you take advantage of that? And how you take advantage of that is playing both sides of the equation in multi-directional type strategies like the straddle, like the strangle. So I had a real enjoyable conversation, Tim, and I hope people got some insight out of it.
Absolutely. I know that I did. I enjoyed it as well. I dropped the link to that podcast in the chat out there, guys. If you're a podcast listener, make sure that you grab this one. Yeah.
And make sure you show up tomorrow for Tyler's Jedi Options, as we're going to geek out a little bit on this topic tomorrow.
Yep, we're gonna dig into it.
We're going to take the topic we discussed in the podcast and in Jedi Options tomorrow during the halftime report. We're going to actually risk graph and show how these things impact the trade. And so definitely check out that podcast, but come join us tomorrow on the halftime report as Tyler and I geek out on Jedi Options in straddles and strangles and volatility build.
Absolutely. Let's get down to market analysis here, guys. Let's start with the S&P stock markets in general. Matt, we're hesitating at resistance. Resistance is real. It's significant for a reason. 4,200 was being tested yesterday on the intraday. Today, we're sitting here on a doji on a very light range candlestick. How are you reading the price action here on the S&P and markets in general?
Yeah, like we said, Emily and myself coming in to the pleasantries here. A little Doji Tuesday, right? Just a little hesitation candle as you're approaching this very, very important resistance zone. Had a good price appreciation yesterday, broke out of the previous pivot point, previous resistance level, got into the zone of that resistance at 4,200 that we detailed yesterday. Looking at the 30-minute chart, you see the nice little price appreciation coming in on Monday. There's the cash open. That's the futures market. So you got good price appreciation, no violation of support. You get into resistance on the intraday, you see the fight happen. And again, anybody that's been around the market for a week understands the fight at resistance. And so you just get a little bit of hesitation here at resistance on the intraday chart. The daily chart's perfectly normal here, waiting for the breakout.
Marky, how do you approach a day like today? Obviously a doji resistance. We're talking cash flow today a little bit. Obviously, what's your approach on a day like today?
This is a by the book rule day for me, and in this area, and I'll explain what I mean by that. I'm a top-down analyst. I do not add exposure very, very often when broad markets are at resistance, or when broad markets are getting a bearish signal, or whatever it is. So I let the broad market dictate my general approach to trading for that time period. I've found that there's never a perfect correlation on everything. We don't get perfection. We don't get a 100%. But I have found that approach has treated me in my trading style very, very well. And so when we're at resistance, or when we're at a known resistance zone, it is a wait and see period. If I've had things that have been good runners, I might even take a little profit. If I have new trade setups that I'm looking at, man, they better be spectacular. When a market is approaching resistance and dojing. And the logic behind that is pretty simple. I don't have to usually pay a lot more to wait for a breakout, whether it's tomorrow or the next day or later this week or next week. And so, I have things cash flowing, I have trades on, I have different things going on. I have exposure, but before I look to do anything new, and this is my own personal, it's by a book rule, when the broad market's at resistance, I'm willing to be a little patient to see how it plays out at resistance.
Emily, what about you? What are your thoughts on market conditions, what you're seeing out there, and how you're approaching these markets?
Well, the reason Mark and I are, the reason him and I are so alike is because on days like this, you go back and you look at your portfolio and you start to manage your current trades, and you look to see, okay, is it time for me to take profit or adjust my stop? Not that we've had a couple of days of a good run, and then looking at those sectors and checking to see what is potentially setting up for you to to execute in the next coming days. I'm looking at financials. American Express has got a really nice setup that it's prepping on. So it's just really preparing your week on a slow day like today when you don't have a lot going on. Just sit down, spend some time, and look for those trades to get into once you do start to get those breakouts.
Yeah, that's an excellent point, Emily, because it's not that you don't do anything. You might just not be placing new trades, but you're prepping because those setups are building. And if you get a broad market breakup, those beautiful setups, man, they have a tendency to really perform if that occurs.
Sure. As I'm looking at the financial sector, obviously it's one of the top rated sectors we have at Tackle Trading. So being prepared for a breakout in financials makes a lot of sense, Coach Emily. And that AXP chart was looking fairly strong. There's a lot of great setups in that sector, though. And going with the strength, being ready for the strength to break out or test those resistance zones for sure. I think it's a great idea for today. Maddie, anything you want to add to financials here?
No, financial markets are setting up for a potential breakout, one of the better sectors that are setting up from a technical perspective. But I agree with the overall sentiment. When you're a Doji Tuesday in front of a potential fairly important breakout, obviously you're managing certain things, but you're also preparing for that breakout. How are you going to what are you going to do if the market does break out? Are you managing existing positions? Are you looking to add on new positions? And I think for a lot of traders, with this type of consolidation in the market over the course of, the financial sector has only been consolidating for 2 weeks now on that breakout. That's a really good type of scenario to see that breakout. But in the broad market conversation, it's a different conversation, quite frankly. You're talking about a good month of consolidation now. You're fighting up against a very important resistance breakout. You got analysis fairly similar, not identical, but fairly similar to when we did see that true leg up right here on the breakout of 39.60. And so I do think it's important for traders to, be ready. What are they going to do if the market does break out, does take that real leg up? Well, it's like everything else in life. It's just, you got a deadline at work on Friday. You got to put some work in to get ready for it. If the market breaks out on Wednesday, if it breaks out on Thursday, if it breaks out on Friday or next week, we don't know, but you got to be ready for that. What are you doing? What stocks, what sectors, what industries are you looking at? And I think it's just a matter of, really kind of going through those watch lists and selecting the ones that you like the most. You take the financial sector. Everybody's got their favorite in the financial sector. Emily was talking about American Express breaking out. Morgan Stanley broke out yesterday, front running the sector breakout a little bit. And so there's already action being taken, guys. Simply because the market is doging doesn't mean their stock's not front running that breakout.
That's right. Yeah. And Morgan Stanley did front run the breakout.
No, there's lots of stocks front running the breakout. Yeah. Some are right there in the breakout channel, but this zone that you better be paying attention, because again, the market could break out any day in the next 3 days, but you're already having some breakouts out there. So, and personally, I like stocks that front run breakouts.
Matt, as I'm looking across all 4 different indexes, I'm not seeing much difference in terms of daily price action. Obviously, the patterns are different on the NASDAQ and the Russell. The Russell is going to be the lowest rated one, but the Dow still looking almost identical to the S&P. NASDAQ still firmed up over the last week. What are you seeing across any indexes? Anything standing out?
There's nothing really to update from the indexes. You got the break. Really, honestly, the NASDAQ started shifting on the double bottom at 13,000. Then everything else is just simply continuation on that double bottom. The violation of resistance and the breakout and reclaiming all the moving averages just support all that evidence. But it really did start here at 13,000 on the double bottom. And so you're looking at this as a recovery. And obviously, like I said yesterday, the expectation is to get up to 14,000. But I still have a little bit of hesitation in the NASDAQ, quite frankly, because it's not a great theme right now in the NASDAQ. And when you're looking at this weekly chart, you can't discount this slowing momentum. That is substantial slowing momentum. That is ridiculous slowing momentum. And so I just don't think you can price project anything above 14K on the NASDAQ specifically, given the fact that you are slowing momentum. And this is not an area of the market that fits the theme. It's an area of the market that kind of is anti-theme. And so I got a little concerned here just from an overall fundamental perspective. But from a technical perspective, you got slowing momentum on the weekly chart. On the daily chart, you got a little bit of mixed data, but you are breaking out of these moving averages, which would, when you combine both the short-term trend versus the long-term, you got to have a price projection of 14. And anything above 14, I think, is just hopeful until we actually break. Russell 2000's dead neutral until it breaks 21 or 23.
Until otherwise noted. I mean, it's literally stuck in the box, like we've been talking about for a couple months on that one, moving sideways since February, basically, when it stalled out off that trend. Let's move through the commodity market next, if we can. Let's have Mark come on in here next for commodity analysis. Crude light first, Mark. Obviously, it firmed up the last 3 days, pushing towards resistance. Anything in the news? Anything you're paying attention to in crude we need to be aware of?
I mean, we're having a textbook lesson on resistance today, right? Broad markets of resistance, crude oil at resistance. Healthy price action the last couple of days. And if you are long oil instruments and you're like, I want higher oil prices, maybe not in your real life, right? But in your trading portfolio, you want, after a couple really big green candles, you want a little hesitancy before the breakout. That's healthy. Now, once again, how commodities or stocks or whatever perform at resistance is always a drama-filled event. There is a lot of unknowns about whether the breakout will occur, when it will occur. I mean, that's why you have to be vigilant if you have trades planned, because as Matt said, with the broad market, a breakout can happen at any time. A little spark can happen intraday. A spark can happen the next day, 2 days from now, and it might not happen. So you have to be there on guard. But a little hesitancy here. followed by a breakout. It's probably going to be good things for energy stocks.
Still in the box as we're hesitating at that resistance zone, Matt. It's almost like literally pushing right up against it here. Anything you're seeing technically that you want to add to that?
No, I just had to redraw the box to get more time.
I had to give it a little bit more time on that right side.
I had to give it a little bit more time.
Who knows how long
When
it's
I
going to stay in that
drew
box.
the box, I didn't take into account it was going to take 42 more bars.
It's commodities. That's
I'll take that into account. I'll check the weather channel next time.
There you go. There you go. All right, keep flashing through the commodity market if we can here. Gold actually firming up and pushing towards that $1,900 an ounce. It's just been higher daily lows on these candlesticks in most regards. Healthy little trend here, Matt. We got a nice trajectory going. Haven't had a pullback in a little bit here in gold. What are you seeing?
Continuation of the same analysis, overextended in the short term. Weekly is starting to form up, and a breakout of 1900 seems like it seems like it just hasn't happened yet.
Yeah, I mean, seriously, right?
It just seems like it hasn't happened yet. 1950 is my target.
Yeah, I mean, how do you think? I mean, because this is the question I have in gold, because the trend's strong. I mean, we all know this, and it seems like 1950 is inevitable. I mean, do you see that?
It wants it.
Yeah, I mean, it seems like 1950, and it's a known. Had a nice double top there. People can see that on the chart. Lots of people are going to take profits there. How do you think price is going to perform at 1950? I mean, just guesswork.
I think it's going to get smacked, and I think I'm not going to care.
So set your target profits.
No, I don't like doing that. I like to read the price at 1950, but I do think it's a battle at 1950.
Yeah, I mean, that's what my gut says too.
It's also not a. Let me put it like this: it's not an area that I think people should be looking to aggressively lock in profit.
I would agree with that.
I've got a different read on the gold movement right now than I did last time. This is more traditional. The price movements are very consistent. It's performed very, very consistently in this current trend. When you take a look at what the dollar's doing, anybody?
No.
Anybody?
It's just ugly. It's gross. I mean, the dollar's gross. Gold is looking gorgeous. It's moving higher. I don't think you need to have some kind of targeting plan at 1950. Even if you're aware of that's where the obvious resistance is, you just assess it when you get there, don't you?
Well, if I'm trading gold, maybe it would be a different conversation, but I don't think people should swing trade gold.
I agree.
So I got trend trading on this right now, quite frankly. Old traders, trend trading, adjust stop loss on pivot points. I don't think you're managing the resistance levels as much as you are the support levels.
And all right, let's move on.
Which basically means you're not looking to lock in profit. You're looking to trend trade.
And Matty, we are starting to hear a little bit of the muffle. If you can try that other one.
Yeah, Matt, you started talking pro gold, and the Fed they immediately we cannot have that. Gold is bad. Didn't you hear several Fed speakers talk about that recently?
They're running interference on that, Mike. They're like, we don't.
Bitcoin's down, so they got to find something to bash in their fiat love. So they're like, well, Bitcoin's. We don't need to worry about that. Gold now, gold bad.
All right. Yeah, absolutely. Well, I mean, here's the thing about gold. It's obviously been pushing higher, and it's a really, really good long-term just investment. We've been talking about that. Emily, are you approaching it more from a theta perspective or a delta perspective?
It's always been theta for me. I mean, every now and then I'll try to get directional gold, but for the most part, I've been holding to that position for so long. It's just really just theta trading for me on gold. Silver, I might try to get directional on, but for me, gold is just cash flow.
Mostly cash flow and long-term holdings and whatnot. I gotcha.
Yeah.
And Matt, your point on the dollar, it definitely was gross, just moving lower. I don't think anybody is bullish on that instrument right now. Last one on terms of market skyline analysis here. Let's get into Bitcoin next. Mark, the pattern's still ugly, and Emily, we broke that box that Coach Matt was talking about over the last couple of months. Faded lower here. Let me draw that box real quick. After this breakdown, now we're in technical no man land here, Mark. We're trying to test the 200, trying to hold it down here somewhere, but there's nothing in here that's looking bullish, in my opinion. What's your read on Bitcoin?
it's, and we've said that this is going to take a minute, right? And when we say a minute, we could mean like weeks or months before you get consistent stability. You never know, right? But traditionally in major support breaks, it can take a long time for volatility to smooth out. It can take a long time for real bottoms to form. It's Bitcoin, so it's going to make 100 million headlines, right? Every day, it seems lately. But this is really simple from a technical perspective. You're fighting to form a support level. You don't have any confirmation over time. You are going to have descending moving averages, which from an algorithmic standpoint, I point this out. Moving averages are amazing momentum indicators. They act as support on the way up. They act as resistance on the way down. And when those falling moving averages catch up, it's going to be interesting from my perspective. The thing I'm most interested in is to see how, if they act as resistance, and then if it comes down to support. I mean, it's just a technical jungle right now. And it's a broad technical jungle. I mean, this is a really wide range on intraday charts. The patience is usually rewarded, both in saving you from trades that you shouldn't have made and providing you new quality entries. It's just going to take a long time on Bitcoin, unfortunately, for that to play out.
Emily, you were on the prediction podcast with Coach Matt and myself earlier in the year, and you did call for 60,000 Bitcoin this year. It did hit it. I don't know who wins the Volcker, though, now that it's started.
Actually, I called for 50. I called for 50,000. I mean, there's still time. We still have half a year to go. So who knows with Bitcoin, right?
It wouldn't surprise me.
As of right now, I win the Volcker. This is not
I wouldn't be surprised.
How is this even debatable? I called for 50, followed by a drop to 25. I'm sorry, it wasn't 60 to 30.
Yeah, the 50% drop down. The volatility has been real here, Matt. You actually kind of did foresee some of that because you know a lot about how this the underlying nature of this product works. It's unpredictable. It's a complete stay away from me in the short term. Anything you want to add to Bitcoin there, Matt?
No, it absolutely is a stay away in the short term until this volatility subsides and until we can start seeing a theme. The negative news is just coming every single day, and Bitcoin's having a difficult time stabilizing because of the negative news. And so let's see that stabilization. You're starting to see a little bit of support form at 35. We know the backdrop of the 200-day moving average plus the 30,000 support level. So you are starting to form some support between 30 and 35, and that is a positive development. But the trend line is still projecting downward. The pattern is still projecting downward. So a little bit of mixed technical data. I think it's a wait and see approach on Bitcoin right now. Let's see 30K. Let's see 35. Let's see those things really form up. I am definitely not V-shaped dip buying here. I don't think it's wise. Let's see. And again, I think it goes back to what we said last week. In these types of sell-offs in the market at this point, I do think we're looking at more traditional reversal patterns in every asset class instead of what was very popular last year during the pandemic on any type of sell-off V-shaped back up. I just don't see that in the cards as much moving into the future. It certainly will happen, but for me anyways, on these types of drops on asset classes that you're looking at picking up on the drop, I think it will pay to be a little bit of patience and wait for traditional reversal signals instead of V-shaped signals.
And Matt, I agree with that 1,000%. And I think that is just wisdom, is that like bad habits were taught in the last year. I mean,
we all had them. We all had them.
Mm-hmm. I fell into some. I mean, you just when nothing ever goes down and every trade you do work, bad habits are going to form. We get back to the bread and butter, though, of technical analysis moving forward. We've talked for months now how the market
and fundamentals, Mark.
Yeah, both. And fundamentals, technical analysis, that beautiful combo. And those individuals that do that, there's going to be lots of opportunities. I mean, big sell-offs can create great opportunities, but you're going to see it. And if you wait for those traditional patterns, you're going to be rewarded, not just this year, but in the years to come.
In the uptrend, the dips were rewarded. No doubt about that. In the downtrend, you've been punished for dip buying. Stay away until you get a traditional signal. And you know, Mark, you and I talked about this the other day, just between you and I. if we miss out on some V-shaped stuff, I think that's okay.
I didn't catch the March lows last year.
Yeah, I think that's okay.
I had a fine year. You don't have to catch the exact bottom to make a lot of money in trading over your life.
No, compound 3% monthly over your life. What that adds up to.
That's right. That's exactly right. All right, guys. Anything else on broad market analysis before we move into stock news here today? There's not much else going on. It's kind of a light news day. Let's do it. Let's talk about a couple of different corporate items, and we're going to play a round of Queen's Court here today. I don't know how the Queen is feeling. Are we feeling in a great mood? Or are you feeling like maybe some bloodshed
I think
today?
there's some paranoia to the individuals in Queen's Court today.
Don't gauge my temperature, Tim. You know what's coming.
All right. Well, a couple of quick corporate items, then we'll get into that Queen's Court. Where that's a lot of fun. It's one of my favorite segments we do all week. Amazon, we reported this last week, obviously in the huddle. Amazon is nearing a deal with MGM Studios for $9 billion. That was already assumed that was kind of moving itself forward. It sounds like they may be closing that here today or the next day. Stuck in the mud. I don't see anything from a trade perspective in the short term on Amazon, but I think it's kind of interesting that they're moving that thing forward. Anybody have interest in Amazon off of this down here near the support levels?
Yeah, after they split, so I can start doing proper cash flow strategies on. I mean, this has been a beautiful 9-month consolidation pattern that I haven't been able to take advantage of because it's out of my price range. You know,
yeah, and maybe Amazon shouldn't have hinted towards splitting on that breakout of 3,400. I'm just throwing it out there. Maybe not hint.
Yes, I know. Now
maybe not tease and then not do it.
Yeah.
Mm-hmm.
Maybe we could just look at the $148,000 billion you cash flowed instead of you're hinting towards. It was just a bad decision.
Yeah.
Now we're all like, we don't care about Amazon until it splits.
We don't care about Amazon until it splits.
Hey, you lied to us. We don't care about you until you actually fulfill on what you hinted towards.
Yeah, we don't care about the box. Just split. The split is more important than the box. Just
the box will still be the box. It'll just be 300.
That's right. A couple of different items in airlines, Emily. I don't know if you've been trading or investing in airlines here recently. Alaska Airline increased their cash flow guidance for the quarter by about $100 million. And then United Airlines, actually in an SEC filing, did show that they have improved metrics upon user per head, how much revenue they're getting per ticket, a couple of different key metrics that they're filing. The jets are interesting here lately, guys. They've been really stuck in the mud and neutral. Anybody have any interest in the airline sector industry right now? Marking?
It's not mine because it's okay. When you look at percentage runs, it's had a good percentage run since the election. And could there be catalysts moving forward? Absolutely. Especially as you move further and further to a full reopening. But from a fundamental perspective, they burned a lot of cash during the pandemic. They're not quite up at these elevated levels. I think there's some fair value here. So, I mean, if for whatever reason you were to get big dips, I know me, I like a big dip, but I can't play all of the reopening plays, and I've just found other areas I like better.
Well, and you might say there's value here, but I think it's hard to determine that, quite frankly, from a fundamental perspective. If you're comparing where they were from, say, pandemic lows, yeah, but if you're comparing to where they were pre-pandemic, it's very mixed. And so I personally, Tim, to answer the question, don't have any interest in any airline in terms of new positions. I think you're looking at managing existing positions through covered calls, quite frankly.
That's how I'm approaching my Delta position. I covered calling it for a long time. Emily, what about you? Do you have any airlines on your radar?
Not really. I mean, when I'm cash flowing, I usually look to see whether I'm going to get, some nice premium. And obviously, because of the low volatility that we have here, really nothing of interest for me at the time. But, could always add them to my watch list when, things start to pick up. But for now, I have no interest in the airlines.
Yeah, I'm with you. Yeah,
well, even if it breaks out 27, what do you expect? 28?
I mean, that's
right.
Right?
It's like,
yeah.
Like, I mean, and I think it is like, cause I've put like reopening plays in their own industry, right? Like in their own little group, like whether it was, movie theaters or airlines or casinos or hotels. I'm like, this is the reopening epicenter group. And so I have some exposure. I just like other areas better.
Sure, gotcha. And then last one and a quick one as well. AutoZone did post earnings. They're actually selling on the news here, Matt. It's not really a tradable stock at $1,400 for some people, but the pattern is now being blown up. They actually had a beat and a beat, but the market's not liking it here. Technically pretty ugly, Matty. Anything you saw in the report that grabbed your attention? AutoZone's not really one that.
Yeah, I mean, honestly, Tim, a fairly decent report. They did officially beat and beat with 31% increase in revenue, but just no buying thirst here, like none whatsoever. Violation of 1450, saw a quick journey down to about 1400. The biggest question on Aflac investors, because obviously there's no trade here, the biggest question is, at this point, a violation of 1400, what does that look like? And for the AutoZone investors, if they're, I mean, again, you don't want to ever get into the point of micromanaging long-term investments, but for the AutoZone investors, this was a fairly decent report that got butchered on the price action. A violation of 1400 does look like 1300 is going to occur on that. You might want to do some risk adjustment, writing covered calls, collaring the trade. But this price responds to a decent earnings report. I didn't go into the detail. They might have some guidance issues, but it's a negative response. And the problem is under 1400, there's just nothing there. There's nothing there. You might have some other stuff like on weekly moving averages, but there's really nothing until you get into the 1300 from a pure price action perspective. And that's a pretty big distance for a stock like AutoZone, quite frankly.
It's almost 20%. I mean, 1550 to 1300 would be quite the correction, but and
well, yeah, but if a company like Tesla does it, it's like, okay, look at that bullish retracement happen.
Right. On Tesla does it. It's an average Thursday.
Yeah, it's a different beast.
Absolutely. So
I think there's concern here, and the concern gets big time if 1400 gets violated.
All right, guys, that's the news for today. Unless anybody else had another one or two corporate items, but
I got a couple corporate items very quickly.
Let's do it.
Coinbase. Let's play a quick version of agree or disagree. Got an upgrade. JP Morgan got an upgrade to a rating of overweight, so an outperform against counterparts. What do you guys think?
Who are his counterparts?
Right.
Who else owns the largest cryptocurrency exchanges in the world?
I hope they're not thinking
fintech or something. I don't know how they would internally categorize it. MicroStrategy. I don't know.
An overweight, they could just be portfolio
Sure.
weighting.
Yeah, but it's basically a buy rating.
Coinbase is software applications, and lots of earnings reports this week out of software applications.
I think it's way too premature for an upgrade on Coinbase. First of all, the technical pattern is ugly. The sentiment around cryptocurrencies is terrible. Coinbase is so dependent. First, we actually saw their earnings report a couple of weeks ago. They're improving, but they do not justify valuation at this point. You got to have elevated crypto levels for these transactions to actually hit and have them make some money because they get paid as a percentage. I absolutely think it's way premature to start throwing an upgrade out there for Coinbase into an overweight category. So I disagree.
As of this point, from a technical perspective, you're waiting on the breakout of 300. And I say that tongue in cheek because that's the legitimate breakout is 300. I think you're premature here. Again, you're still looking at a bearish downtrend. You haven't broke out of a resistance level. You're still fighting against the moving averages that are putting pressure on the downside. And, if Bitcoin does recover, Coinbase is going to recover as a proxy instrument for Bitcoin. But again, Bitcoin analysis is very, very, very mixed, very difficult, very complicated right now. You could see some random spikes both ways. And so to me, Coinbase is kind of in that same scenario as Bitcoin. I mean, JP Morgan might as well have upgraded Bitcoin today. And that's a mistake.
Well, and the thing is, you have to take analysts, especially with newer stocks, price targets and upgrades with a Morgan stock. I wasn't going to bring this up, but it's relevant for here. AI, if you put in ticker symbol AI, recent IPO, Morgan Stanley had to downgrade their price target from 100 to 60 today. So a few months ago, it was 100. Based on, that's a huge, massive change in your analyst
you
rating.
could have just said you don't have to listen to JP Morgan analyst.
And so it's just like realize that when you see outlandish price targets, even though these people are the best and the brightest, in scare quotes.
Really, the best and the brightest.
I use
what were
scare
they looking
quotes.
at on AI?
I
Honestly,
used.
what were they looking at? How is that the best?
They
and the
were
brightest?
chasing price.
This is pathetic analysis out of JP Morgan. This isn't a company you should even rank, let alone put as an upgrade and a price. Like this is. I'm gonna go off on JP.
It's worth like. But I some traders like they have a price target. Well, how are those? Well, they got a price target of 60 now, because you got to realize that these people are guessing a lot, and sometimes they're getting paid for their guesses. So you got to be careful in making any. Well, not be careful. You shouldn't ever do it. You should never associate your trading with a price target some financial firm throws out there.
He's not wrong. They make them up.
That's right. That's right. And the Coinbase overweight rating is silly to me.
So is Coinbase a potential?
I mean, can't we go to like a buy first?
Can we get back to IPO prices first?
Can't we do something good first?
Yeah.
I mean,
listen, could Coinbase be an amazing opportunity at some point in the future? Sure, but I mean,
no, it will be an amazing opportunity.
It's yeah. So I think we disagree.
So you do not agree with JP Morgan's upgrade
I think it's made up. I think it's made up.
There's no analysis for an overrate rating here on Coinbase based on what fundamentals, based on what technicals. Truly, and it's a serious question.
Yeah, I mean,
if
it's
you're
just made
analyzing Coinbase from a fundamental perspective, how can you upgrade here?
You can't. There's too much uncertainty.
And if you're analyzing from a technical perspective, how can you upgrade here?
You downgrade.
So what are they looking at? There's no historical support. There's no historical understanding. There's no valuation here. Like, where's the analysis on that?
They're probably, getting their pockets sweetened a little bit, or they're just biased against it. Maybe they're just firm on the crypto space and calling for some.
It's the same firm 2 years ago that was about as anti-Bitcoin as it could have been.
Yeah, it's a good point as well.
Yeah, they don't believe in the product. They believe in the money that comes from the product.
That's right. That's right. And did you have one more, Matt? I think you said you had a couple.
No, my anger got done with.
Got it out with.
You got triggered.
No, I'm good. Now I'm ready for Queen's Court. I'm ready. Now I'm ready to see you two get your heads chopped off.
That's very presumptuous.
Right. Well, let's set this up here. Every Tuesday,
I know what's happened in the last week.
That's right. Each and every Tuesday, Coach Emily joins us on the Halftime Report. She's a veteran coach over at Tackle Trading, one of the greatest that we have in terms of analysis and insight and cash flow, education, and all that kind of stuff. I'm buttering you up right now. Yes, Emily, I apologize. But she is our queen, and she runs the Women in Trading group. And we've been doing this on Tuesdays where the three of us submit a trading idea or an investment idea, it could be one or the other, to Emily, and she gets to analyze it and judge it and decide whether or not she's going to lop our head off if it's not good enough or if we get to live another week. Emily, you're up.
Up for what? You guys present.
Well, you get to. I've learned not to presume who you want to present first.
Tim, in the opening minute of this segment, Tim can never say anything right. It doesn't matter what he says.
Like if I said, Mark, you're up, she'd be like, where you? That's right.
Oh my goodness gracious. All right. Let's go with Mr. Confidence over there in Matthew Justice. Let's hear what you got.
All right, we were talking financials a little bit ago here, Em. It's one of our highest rated sectors at Tackle Trading, a very consistent area of the market. In fact, materials and finance right there, 1A, 1B in from a price perspective, fighting up against a very clean breakout here. We know the analysis in the financial sector. You were talking about American Express earlier today, Em, and I certainly like American Express as well. It's one of my favorite technical patterns on a breakout here from a multiple time frame analysis, swing trading position. I think there's a lot of ways to go about that. But I kind of went a little bit more safe. I wanted to stay financial, but I didn't want to go bank for... It's me. Didn't want to go bank. I didn't want to go credit card companies because I see a lot of fairly decent trades. But I wanted to go a little bit more, Buffett. We saw Buffett dump a couple banks in his 13F, pick up a couple insurance companies. I'm going to take a look at Aflac here, AFL. Aflac here is in a very consistent trend line over the course of the last 4 or 5 months. After that earnings report in November, saw real rapid price appreciation, got a nice 45-degree angle, really hugging those moving averages, very consistent analysis. And over the course of the last couple of weeks, you've really seen it, an area of the market stabilize at the top end of its channel, has not violated any major support levels. In fact, has saw support levels increase as we saw volatility increase in the NASDAQ, in the S&P, in the Dow Jones, certainly in the Russell 2000. Obviously, a lot of the sectors hesitated with that volatility change as well. The financial sector held up, in my opinion, as well as any of those sectors out there. Aflac showing increasing in support levels with a horizontal resistance level. That puts you smack dab into the cup and handle type technical formation from a continuation perspective, which is a really good place to be when you're looking at a little bit longer time frame, outside those traditional swing trading time frames. Looking at a trend trade here, more that position style. Aflac, and not only do I like it technically with the increasing in support, horizontal resistance, what I really like about Aflac is this. We've seen an area of the market, Aflac, very consistent, 45-degree angle, up over the last quarter and a half or so, but you're still looking at a stock with a PE ratio of 7.24, very undervalued. Forward PE ratio right there at about 10.98. Right now, guys, the S&P forward PE ratio is 21, and that's after amazing, robust earnings season. We're talking about a stock here with a forward PE ratio that is half of that, right there in the 10. You're also talking about it paying a dividend, again, 2.3%. PEG ratio, which take into account growth. Again, we're talking about a very consistent trend line, very consistent bullish trend line here. PEG 1.18, right smack dab into that value type assessment. Anything over 1.5 in PEG is typically a little overvalued. Right now, you got a stock that's in a very consistent trend, P ratio that's in the value perspective, PEG ratio supports that. And then the final number I'm going to give you on this breakout position trade on Aflac is the price to book. A lot of times in the market, in my research from a fundamental perspective, I see a lot of times where you get a P ratio that looks good, but you have some growth concerns, so the PEG looks nasty. A lot of times I'll see a PE and a PEG look pretty decent. You have a good, strong understanding of valuation, but then the price to book is absolutely horrific. Right now, the price to book for Aflac is printing at 1.21, which means they could dump everything and they're still a good value. I like this from a fundamental perspective. Technically, it supports either a swing trade, but this is Aflac. So for me, it supports either the swing trade or the position. Given it's Aflac, I do like the position trend trade. You can also write covered calls in this environment on the position trade as well. Aflac is my pick for the queen this week.
Emily.
I like it. I like it because you have options. Like you have different ways you can approach this, right? You can go cash flow if you want to. You can figure out whether you want to do the covered calls or start off as a naked put and boomerang this thing. You've got some choices going that way as well. You can position size and do some credit spreads if you can do that. Maybe even some diagonal calendars and kind of poor boy cover call this. I mean, you can go quite a bit of ways with Aflac.
It does fit a lot of different systems.
Yeah, it does. But for me, I would, looking at that PE ratio, looking at that dividend payout at 2.3, I can still get some decent cash flow at 1.5 if I'm doing this on an IRA, or 3 if I'm doing this in the margin. I like it just for a simple cover call.
Yeah, and it's very conservative on the covered call. You're not going to get the massive ROI on Aflac. But again, you don't have to deal with the volatility shifts on Aflac either. So there's kind of a yin and a yang there.
That long-term trend is really, really, really beautiful.
And when you look at it on a weekly chart, you're going to see a price point that is fairly important to Aflac. And if you'll draw a line from the previous high over there in 19, you're going to see that high of the weekly channel there coincides with a very important breakout channel against the all-time high. And so you could see some love above that level if we do achieve that as well. So you do got some chop above the breakout channel, but again, it's something that I think you can navigate, especially on a stock like Aflac. If this was Netflix, I would have a different take on that wig. It's Aflac. I don't
And
have
it,
that big of a take on the wig.
and it looks like Team Tackle also loves it as well. So, if Team
It's
Tackle loves it,
conservative.
it's good.
It's conservative, but we all need very conservative picks in our portfolio.
Yeah. And that cup and handle on that daily looks pretty nice. And I'm
And
having
again,
myself a nice cup of tea at the same
and I
time.
keep
So.
geeking out on this, but I'm going to say it again, guys. When you see trends like Aflac over the course of the last year, right? And you're seeing the pandemic low. What was the pandemic low price? It was like around 30-ish.
Yeah, 23 actually.
23.
It ticked all the way down to 23.
But
Yeah.
really since the move up from the base, not the ultimate V-shaped recovery, but from the base, you're talking about a stock that's up, what, 60, 70%? And yet the P ratio is still good. PEG still good. Price to book still good. How many times do you guys see a trend like this? And yet you love the technicals, but now you're looking at it fundamentally saying, at some point it's got to catch up, right? You don't
the Zooms
have
of the
that read
world,
on the conservative areas like Aflac. And so it's a play I like from a conservative perspective. I think you should go Tim next, by the way.
Is he now?
I know his pick.
It's not going to transition.
No, you've survived, so you just now sit on your corner and let and.
Oh, my feet are already kicked up watching I got the popcorn. I got my watermelon tea. I'm ready to rock and roll.
Laugh it up. All right.
I'm gonna go with Mark next.
All right. So, Matt said, you get the yin and the yang, listen, low volatility. I'm going to go the other corner of the universe. This is becoming, and I'm not quite there yet, but I'm really close to a ride and die stock. And when I use that term ride and die, I'm willing to buy more if it goes lower, and even more if it goes lower, and even more if it goes lower. And I have loved this company since it IPO'd. Tim's brought up the chart. It's Palantir. Now, when Palantir first came out here on the halftime report, this is before IPO started going crazy, right? Where every IPO was an instant double. That's changing, right? We see the Coinbase slide off. We see other companies giving back those IPO prices. But, back when Palantir was at $9, $10, I didn't know a lot about the company. I had done some initial research, but I mentioned here on the halftime report several times that I thought there was something special here. I thought there was something unique here. I wasn't alone, as Palantir, maybe a little early, but Palantir soon became this cultish type stock over the last year. Dramatic, huge price movements upwards. And along the way, when people would ask about Palantir, because I'd been very public about how much I loved it, I'm like, listen, I love the company, hate the valuation. I mean, when you were in $30 and $40 and having that wild ride, valuations matters, even in craziness, even when things are going parabolic, valuation always matters to me. And, it was very, very pricey. Now, I am not going to make any bones about it. Palantir is not cheap today. It is not cheap. It is a little pricey, but I love this company, and I think lots and lots of people are coming on board. And I'm not talking about the retail traders who have gotten obliterated in the last year over the last few months, and retail participation down. I'm talking about analysts. I'm talking about industry people. People see the same things I do. You see a big data company that is transforming its space with innovative ways of approaching an entire area. And data is no small area. Data is going to become increasingly, we already are, I could say more and more, companies using analytics and data. Palantir is, I really do believe, they're not just on the frontier of pushing things to new levels, they're transcending it. Their CEO, management is something that we do not discuss enough as investors. It's one of the core principles of Warren Buffett, having a management team that you believe in. Their CEO, listen, he is not your average Joe, but I absolutely love this man. I think he's a true visionary. He's eclectic. He's a little different. He's not my Micron CEO. One of the reasons I love Micron CEO is because he's just so absolutely to the point. This is an eclectic visionary, and one that I think is a true visionary. Now, why I'm bringing up Palantir is a couple things. One, they turned a profit this last earnings season. And it shouldn't, it surprised me a little bit. It surprised me a little bit, but I guess it shouldn't, because what's got me really excited about Palantir is the endless string of government contracts they continue to get. I mean, Tim and I were joking before the show. They know people. They know people. They continually get these big contracts. Now, the thing I like about government contracts when it comes to data is oftentimes that those things can be long-term sources of cash flow for a company. And it's not just here in the United States, just over the last 24 hours, branching into healthcare in Canada. This is a company whose services are going to be worldwide. This is a company, albeit pricey today, is a company, if it was at 12 bucks, I'd back up the truck. When that is the case, I don't mind starting to nibble at higher prices, even if I don't love the valuation. From a cash flow perspective, this thing is very, very, very high volatility, higher cash flow. It's going to bring bigger swings with that. That means it's not for everybody. If you do not like bigger swings in a stock, this is never going to be your cup of tea. It's never, maybe one day, 2 years, 5 years from now, when it becomes more of a mainstream stable tech, I'm willing to ride the boat. Lots of the meme stocks and this and that, they've gone by the wayside. Palantir is not a meme stock. It's a real company with a real vision, great CEO, leading, and I think just transforming the data industry. And just every week that goes by, it seems like getting another contract. I think this is a true growth story, willing to pay a little premium for a growth story. I present you Palantir.
I was going to chop your head off because of Palantir, but I think I've learned a lot more about Palantir today than I ever had. I had no idea that they're that involved with government contracts. And the fact that you like the CEO and where the price is for a growth stock to be able to pick that up, even though the valuation is high.
Let's identify what that valuation is. It's over 100 on the PE ratio. This is ridiculously high. Just before anybody tackles, like when we talk about elevated valuation, this is Tesla range. It's got no forward, and it's got 100 PE. And that's after a drop from 42 to 30.
Right. So it can only imagine what it was sitting at 45, right? But you really sold me on this. I haven't been a fan of Palantir, maybe because I just really haven't been paying attention to the space.
It's been hard to be a fan of things that became popular for reasons other than a story or whatever. I mean, when things get caught up in Reddit threads, there's an immediate knee-jerk reaction against it. There's so few real growth stories I believe in.
Can I just ask a question? Outside the Reddit threads, what analysis is there of price appreciation here on Palantir other than meme moments?
What do you mean price appreciation?
What's going to make it go up?
You said that, it's not a meme stock, but the only price appreciation it gets is during meme moments.
Well, I think the long-term growth story is there. This is not a swing trade. This is not a position trade. This is an investment or anything in Palantir. And you have to be willing to buy it lower. That for me is what an investment is. If something were to drop 50%, am I excited about that?
Okay, be honest though here. If Palantir dropped 50% from here, nobody's that surprised.
Nobody's shocked at 10 bucks.
Nobody's surprised at all. In fact, technically, it's probably doing it.
I'm sitting on the fence with this one. I'm not there yet. Let me hear what Tim has to offer, and then I will give my final say of whose head's getting chopped off.
All right. We're going to go from one overvalued company to another overvalued company, and we went from conservative with Aflac with a beautiful technical trend and a breakout. Now, two different, very, very different kind of ideas. Now, Emily, I was thinking about this all day long. How am I going to present my pick to the queen, and where am I going to go? Should I go into industrials, financials, something else? And I went into my watch list and I really walked through all of the stocks that I track or that I actually have been trading or investing in. Tilray's one I already own. Just full disclosure on that. I've been an investor in this one for quite some time. Now, Tilray got swept up in the craziness. You guys want to talk about meme craziness? That happened in January. Sure, Palantir went to 45. Tilray went from 10 to 65 at one point during that blast off run. Now, there's a couple things about that. That's obviously not sustainable. Okay. This price has now been digested over the last several months and brought it back down basically to pre-meme stock runs. $15.80. I mean, we're right where Tilray was at the beginning of January before the GameStop craziness started. So all of that price wildness that just could not maintain itself has now been chopped up. Okay. There's another bit of analysis. Number one, I like this long-term trend hugging the 200 period moving average. Within the technicals themselves, I see momentum shifting. Now, momentum shifting does not make it bullish yet, but I do see that changing and rolling in here. From pivot to pivot to pivot, we're trying to fight in here as you're getting this moving average congestion. That has the potential for a reversal. A breakout at 20 would be very clean, and I know we're a ways away from that. But there's another thing I love about Tilray inside the marijuana space, because we know about increased legalization and expanding markets, and Germany's opening up their market, and Canada's opening up their market over the last several years, and the US, different states over and over and over, opening up to legalization, you bet. But here's the thing with Tilray. They just formed a merger with APHA that put them as the top producer in Canada. And it's the perfect pair because APHA was a huge producer in the marijuana field. They had access to markets in Europe and South America that Tilray did not. So their distribution network has improved and increased. It's my pick in the space. It's the one I like. It's the one I believe in. And I know, very aggressive. I'll give you that. It's got liquid options. There are things you can do to control that. There are things you can do with covered call on that side of it. Aggressive stock. Valuation's just simply not there. We got a negative PE ratio at this point. They've not been making money. They had a terrible earnings report just a couple weeks ago. But this one is a true, it's about the future, and they're positioned to take advantage of this movement into this industry. Emily, my pick is Tilray.
All right, so here's my take on today's picks. We have Matt, who brought a very nice value stock. Nice, easy, simple in Aflac. And then you guys bring me two growth stocks that really haven't been performing quite well over the last few months, but are trying to make that bounce. And I was slightly being swayed on Palantir with Mark, just because I could see, just based on his analysis on, because he studied the company with, with the CEO and the government contracts and all that good stuff. And then Tim, you bring Tilray. So I can't pick either one of those after having looked at Aflac. So today I'm going to go for a double kill.
Double kill. It was in the
I'm just
cards.
going to have to chop off. I'm going to have to chop off both you and Mark. I thought you may have brought me something a little bit better, but you even went lower than Mark with Tilray. So I'm going to have to do a double kill on this one.
It's tough to go from the value of Aflac and the clean on that breakout.
It's so hard. It's so tough. Hard. And I by the way, I really, really do see that, that your thesis on Palantir, Mark. And again, I didn't know much about it because I kind of I just blew it off and put it in that same box of AMC and GameStop and everything else that was just there. But I do love that I know something new about it, and I might consider it, and I might look into it and keep it in my watch list. But after looking at Aflac, I can't put it in the same space as Aflac.
Yeah, can I add to it a little bit? You're looking at a couple things. One on Palantir, and I don't have the same fundamental take that Mark does, but I do look at it technically here, and I see it fighting up against a little bit of a major resistance zone. I kind of feel we're going to retest those lows though through here. I mean, the trend, most of these upward movement drifts have been beat back down over the course of the last 5-6 months on Palantir. So I kind of expect that to continue here, simply because the market's recovered a little bit, bringing up a lot of things. I don't see this breaking out of anything major yet. But I mean, a traditional double bottom at that point, yeah, I might be interested at that point. On Tilray, Tilray's interesting. I don't think it's there yet, right? But I do think it's interesting. And if you look at the weekly chart, is what I find most interesting about Tilray. And just take a look at it. Really, if you take a look at the lows in October and November, and you draw that trend line, right, in November and October of last year, and you simply connect those pivot points, if you discount, and again, this just is helpful more than anything, if you discount the meme movement that happened with GameStop in January, that a lot of these types of stocks just went gangbusters, right? Well, if you look at what its normal trend trajectory was before that moment, that's currently where you are today. And I do think that's interesting. I find that interesting. You're also fighting, unlike Canopy Growth, which got an upgrade today, by the way. Canopy Growth did by, I want to say it might have been JP, but I can't remember exactly what the bank was. But when you're looking at Canopy Growth, underneath that 200-day moving average, a little bit of spotty analysis. When you're looking at Kronos, underneath that 200-day moving average. So if you are looking at a marijuana company, Tilray probably is the one, but that isn't if you're looking at a marijuana company.
Double kill on a Tuesday, Emily.
Double kill.
You killed you by yourself in reactor by yourself. You got 2 kills in less than 30 seconds.
It may have something to do with the kill on Among Us and not winning the title on Wednesday with Trademaster. So maybe a little bit of vengeance in that. But Aflac was really nice.
Dude, what happened is Aflac was too good of a value pick, and then we're bringing up these growth ideas.
Like, I did not go first with Aflac. Here's a P ratio of 7. Well,
it's almost like we had a little revisit of trash for cash.
Yeah. It's like following a great speaker, and he's like got a standing ovation. You're like, what's on my note?
Listen, I'll bring up Palantir again 3 years from now when it's at $63 having a high base.
Okay, but if the market's at 90,000, nobody's going to care because everything went up.
I'm sorry, I believe in Palantir. I really do, and I think it's going to be rewarded. It's just all how you play it at this point.
It's pre-calling scoreboard. Your head is chopped. My head is chopped.
Oh no, I started running for the door the second you brought up Tilray. I'm like, I'm not making it out of this. I put my doppelganger in there because I was like, bro, you're dead, dude.
All right, guys. A lot of fun, Emily. As always, appreciate your insight and analysis. Don't love getting my head chopped off, but I thought I'd go bold today. It did not reward me for that choice. So that is what it is. All right, guys, let's start wrapping up the show. Kind of again, Doji Tuesday. Here we are up at Resistance. Had a lot of fun talking markets with you guys today. But let's start getting some final thoughts. Let's go with Mark. You first.
My Dojo, we did the analysis. I'm excited tonight, Coach's Show. Greg Holmes going to come back for another week, and we're going to continue talking about long-term investing. I promise you, he wouldn't like my Palantir pick either. I've loved interviewing Greg from an investing perspective the last couple weeks. We're going to finish up with Greg, and we're going to do more coaches in the coming weeks on the Coach's Show, talking about how they approach long-term investing. Greg's very methodical. It was a great interview last week. He's going to finish up tonight talking about his process for long-term investing, checking the boxes, what he does. And if you are interested at all in long-term investing, this is a great series. Get different perspectives. Pro member, join us tonight at 8:30 Eastern on tackletrading.com.
8:30 Eastern with Coach Greg and Coach Mark talking about fundamentals. Emily, you next.
Kind of like what we said at the beginning of the halftime report. It's a Doji Tuesday, so look at your current portfolio, manage accordingly, and start prepping for those stocks that are getting ready to either break out, and just kind of figure out how you're going to play the rest of the week this week.
Wonderful. And Maddie, you final thoughts?
Same as the thoughts as we came in here. Definitely check out the Trading Justice podcast from yesterday. Had a great conversation with Coach Tim regarding volatility builds, how to play them, why they occur. And then tomorrow during the halftime show, Coach Tyler Craig and myself are going to be geeking out on some volatility builds and how to take advantage of volatility builds in Jedi options tomorrow during the halftime report. So definitely come back and check that out. And outside of that, guys, Team Tackle, love you guys. Have a great rest of your trading day, and we will be back with you tomorrow for the pro members of Tackle Trading. Definitely get into that coach's show here tonight. I'm looking forward to reviewing all those fundamental conversations. And although I love technical analysis, it is my favorite form of analysis. I put more emphasis on technical analysis than I do any other form of analysis. But fundamentals get you in the zone to take advantage of technicals, in my opinion. And the combination of fundamental analysis and technical analysis is like Barry Bonds on post Pittsburgh Pirates baseball player. Like it's just Barry Bonds before he went to the San Francisco Giants, Barry Bonds when he was at the Pittsburgh Pirates. If you have technical analysis, you're still a Hall of Fame baseball player. You have fundamental analysis, you're all-time great. The combination, I like my baseball analogies.
I thought it was a good analogy.
The combination, and I got a few steroid 1990s jokes, but the combination of fundamentals and technicals is very powerful in my opinion. And so I always look forward to listening to, great investors like Coach Greg and, Emily and Mark, and just talk about what they're seeing. And honestly, like with me and Mark and I will not agree on Palantir. It's not going to happen, like ever. We're never going to agree. It's honestly the eye of the beholder. He likes what he sees. I don't like what I see. But I love listening to him because even though I do disagree on Palantir, I have such a deep respect for how he goes about assessing different companies, because he really does bring a different perspective to it from and literally like Emmy you were talking about.
Yeah.
He said some things about Palantir. I'm like, I need to check the tape on this. I need to check on these things. But, he obviously knows it far more than I do. And so even though I disagree, I love listening to his perspective because it does help mine out too. And, listening to Greg tonight and Gino next week and Tyler and, Mark, you didn't say me, but I would love to come on the coach's show and there is nothing I like more than me getting interviewed. I don't have to do the host. That would be great.
And I say this all the time when I'm teaching classes, one of the strengths of tackle trading is that we do not have this in the box, this is the only way to do it approach. No. And we have a collective group of coaches with a ton of experience, 10, 15, 20 years. 5 years at the minimum. And like a lot of experience with different perspectives, and traders can glean from that in creating their own. It's a very unique approach out there. It is not an in-the-box system that you see out there. I think tackle trading is very special in how they do that.
Well, and don't get me wrong, we have our rules, we have our systems and all that, but we all bring a different perspective. There's no doubt about that. And we're honest with that. And plus, we're not five and we don't have egos, so that we're okay with everything.
Whatever. I'm going to rub it in when Palantir goes to the
five. No, outside of Mark, we don't have egos. But,
except I'll scoreboard with the best of them.
Yeah, he does. But I am looking forward to those conversations because, honestly, Mark, I've talked to Gino and Greg and Tyler a ton in my life about these topics. But when you sit there and listen in on two other people's conversations, it's different than when you're participating in it. And so I'd love it just to get the insight of what they're looking at. And especially now. And the reason I love this series so much, Mark, is I do personally have open questions on fundamental analysis of the metrics that we were born and raised with and whether or not they are still the same metrics we're moving into the future with. And listening to Gino, Tyler, yourself, and Coach Greg, and just hearing the different perspectives from the coaches, it truly does help me out and solidify my own view of fundamental analysis because things have changed. Things will evolve. And surrounding yourself with amazing, talented people that care about not only themselves, but your journey, I think is really, really powerful. And that truly is the beauty of tackle trading. It's a collection of like-minded traders, like-minded investors, navigating the markets together. And I absolutely love it. Team Tackle, you're the best. We've geeked out enough on that topic. We'll see you tomorrow.
Everybody, we're out for today. We'll see you back same time, same station tomorrow. And do not miss tomorrow's show, Jedi Options. We're going to be featuring
I'm excited about Jedi
volatility
Options tomorrow.
build on some of those straddle
I'm excited.
candidates. Going to be a lot of fun.